Hello everybody, welcome back to another video. I'm Xauusd, and in this video I'm gonna be talking about Xauusd, and I'm gonna analyze it on 5-minute time frame. And today is 9th of June 2025. Okay, last Thursday, previous week, market rallied downside during the New York session with a spike, and then it corrected itself with two legs, and then after that it created a channel, which is the second phase of the market. It touched the channel for 3 times. This is the first point, the second point, and then the third point. And if you see, market a little rallied downside and then came back to test the trend channel line and broke it from above. And when this happens, when the channel breaks, we know that we have entered into the new phase of the market, which is the trading range. And if this is the trading range area, we know that we have to buy the market at the bottom of the trading range and sell it at the top. Here, market comes back up to test the top of the trading range, comes back down. You could just buy with limit orders, then it goes back up, it breaks below this pattern, makes a pullback. You can again short the market here, since it's the strategy in trading ranges, and you could have put your stop loss right here. Let me take this trade as an example if market was live. So 1 to 2 risk to reward ratio. Again, market comes back down to test the bottom of the trading range. For the first time it rejects it, but this time it can't hold it and breaks to the bottom. And when this happens, you can take the opposite side of the trade, and if you had put your entry point, your entry positions right here, you could have put your stop loss in the middle of the trading range, which is also a resistance area, then short the market, and easily you can see it would give you the 1 to 1 risk to reward ratio. And after the trading ranges break, we should expect a measure move target from the bottom of the trading range to the top of it. You have to measure it and see where is the possible place for the market to touch. And I did it, and I have done it already. This is the bottom, this is the top, this shadow, and then I measured it. This is the bottom again. Bottom of the trading range. What is the measure move after it breaks below this trading range? Exactly, you can see market comes back down and test it, and you could have taken this trade also. So this is the first cycle. A spike, 2 legs correction, channel phase. And you could just, because after a spike we know market right now is in a channel, you could just put the highs and put your stop losses above the previous highs. For example, specifically at the moving average is the best place to take your trade. Then market breaks below the low and comes back up. You could have taken this trade again. And here as an example, I'm going to mark it because it's right at the trading range. If you had taken this, you could have put your stop loss above this high right here and short the market. 1 to 2 risk to reward ratio. Then market breaks the reward. It's the third touch, then trading range, and cycle finishes. But what happens when the cycle finish? Let me tell you something about the 3 consecutive bearish candles with a lot of momentum. A lot of traders see this and then they short the market. But to me, this is not a new cycle. And the reason is that after market has gone for a very long time, when I see series of candles with big momentum, I sometimes consider this as an exhaustive gap. And this one here is an exhaustion gap. Okay, let me clear my chart a little bit to make my point a little clear. So this one here with, I think this color is really good, it suits it. So okay, excuse me. Okay, this is the exhaustion gap, series of candles with big momentum, and a lot of traders also, when they see this this big momentum down here, they take their profits. That's why market reverses back instantly, and a lot of traders come back again because they see this as a spike. Okay, so when the trading range finishes, it breaks downside, market finishes with an exhaustion gap, and then the theories of candles form, which is another cycle, and I would consider always this as at the beginning of a new cycle. So what is the direction of the new cycle? The trend is upside. So is it wise to take the downside trade? Of course not, because we know after it creates the first pullback, which here with this candle that comes below the bottom of this bearish candle, let me zoom it from this moment on. I want to zoom it and tell you exactly what is happening. If this is a spike, you can see there is no pullbacks and price never comes back below any of these bullish candles. So when it comes back down and makes the first pullback, I know that the spike phase has finished, and we again enter into the second phase of the market, which is the channel. And if you see, this is the channel. Now market is time for the market to create higher highs, lower lows, higher high, lower lows, higher highs, and lower lows. And when I see this, I'm sure that we are in a channel, and I'm gonna just buy at the moving average or buy at the possible trend line. I'm gonna draw the trend line between the two lows that market formed. This is the first low, this one is the second low. Then I'm going to just extend the trend line. When market touches it, I always wait to see whether its market is gonna reject it or not. If it rejects it, I'm going to buy again. For example, as an example, the first rejection has happened with this candle, signal bar, entry bar, but always the second entry is much better. Market comes back down, and this one is a perfect entry to me, and I'm gonna take this trade again. And something else that we have also learned it in books, we know that this is a pattern, okay? And let me draw a resistance level. Okay, we know that this high is broken. Market breaks it clearly above and then creates another high. You could even have taken this trade here. If you had taken this, the best place to put your stop loss is below the low of this candle, okay? And market rejects it, comes back down a little, but this level is still holding, and this trend line gets tested finally, and another double bottom pattern here. Okay, another double bottom, these two arrows, and then markets finally breaks from the top of this pattern, and another beautiful entry bar we have. When it breaks above it, comes back down to test it, and this resistance level again becomes the support. And also something about this pullback I need to tell you is that when market pulls back, before it breaks this top, you should wait to see whether it is going to create a double bottom, right, this one here. But if it didn't come back down and a candle broke from this top, okay, this top, and you can see this specific candle clearly has broken above, and because it has broken it, it's another entry point to me, another very good entry point. In fact, if you had taken this trade, you could even add more to your volume. So breaks from the top, put your stop loss below, and trade in the direction of the market. If you see, if a trader had taken this place, 1, 2, 3, 4, even 5, which is the top of this channel right here, even 4 and 5 risk to reward ratio, and if you had add to your volume here, you would take 1, 2, and 2.5 risk to reward ratio. And also the process again continues. Market breaks from this top, comes back down. But let me tell you guys something about this place which I think worth noticing a lot. What's the difference between this breakout and this breakout? There is a difference here. This breakout tells me that market is really strong. Why? Because when market broke from this top and it made this pullback here to the top, to this top, it couldn't draw the market below this level. And this gap, this place, the bottom of this pullback to the top of this top, and when market breaks above it and it can't just come below this high, something tells me that buyers are really strong and they are only buying. And you can again buy at the top of this breakout, and even you could have taken this trade with this bullish bar. Even here, if you had taken this again, you could have put your stop loss below this low. And let me take this trade as an example with the close of this specific bar. Let me put my stop loss below here. You see, market comes and touches the 1-to-1 risk to reward ratio. All right, and when you're at this level, if you had traded this, if you had entered into the market, I always suggest you to take some profits, because this is what professional traders do, and they never are so positive about market going long for going up for a long time, and there is a reason. Again, here the market cycle comes to help you. They know that after a spike, which is here, it started with a spike, and then market starts with the second phase starts, and market touches the trend channel line for 3 times. This one is the first touch. You see, comes back down, goes sideways, and in fact, when market goes sideways into a specific direction or trend or spikes direction, this is another sign that market is really strong, because sellers can push the market down and it creates another high. You see, so buyers push the market up, comes back down, goes sideways, in fact comes back up and tests the trend channel line for the second time. And if you draw the market between this height, which is top of the spike, is the first top, and this, and if you just extend your trend line, you see what happens, something really interesting. This is the second touch, and this is the third touch. And again, we know that for nearly 80% of time, market channels end after price touches the trend channel time for the third time, which exactly it did here. And what happens after that? Market touches the trend channel line for 2 times. This one is the first time, and this one here is the second time. And it even extends a little more. It just punctuates the top of the trend channel line, comes back down, and then comes back up again, tests it, and can't go up, comes back down again. It breaks upside but reverses down. So what does this tell you? It tells me that this place is only, oh my god, this place, it's bothering me. Let me just delete it. And okay, this tells me that this is only a failed breakout. And when trend channel lines can hold the price and reject the price for the second time, it's a really good place to take the opposite direction of the trade. So if this is the first stop, it breaks, comes back down, fails, comes back up again and fails. This is a really good candle to take the opposite side of the trade. You see, it's a little risky, but it works. And price, when it comes back down to the channel, it has to test the trend line. First touch, second touch, third touch. Exactly, you see market comes back, touches, and sometimes 1 point even price goes below the trend line for 1 point, and this is the place you have to take your profits. If you had gone short, entry, stop, 1-to-1 risk to reward ratio, and if you had hold it, you could even go lower. Market went lower here as 1-to-3 risk to reward ratio. All right, and right now, what happens when trend line is broken? Now, I think we all know that market has entered into a trading range. Market goes up, which channels are also a part of trading range, and market breaks below, comes back down, and definitely right now we are in a trading range. And in the morning, I released a short video on YouTube and also Instagram, and because I took this trade. And the reason is that I knew that this candle, and right now the trend line is broken, and some people might have gone long here. This is a bull trap. So, and market is gonna just trigger all the stop losses. That's why I took the opposite side of the people who thought this is going to be a new cycle, or this place here, the theories of candles are going to push the market higher. But we are in a trading range, and in trading ranges, I'm only sell the pullbacks at the top of the trading range. So if this is the top, I'm going to sell the market, and this place here, if I consider the channel as a part, as a leg into the direction, as the first leg of the trading range, so market can come back and test the beginning of the trading range. This is at least the scenario I had at this moment, but something about this this horizontal red line, let me tell you. The reason that I put my profit target after I shorted market here, let's consider I have taken this trade and I put my stop loss above this high. I shorted market right here, market came back down, this level couldn't hold and it broke downside, came back down, and here I released another video because it had moved towards my profit target for 90% of the way. That's why I released the short. Market came back down a little and triggered all my profit targets, and market rejected back up. What's the reason here? The reason is that this today, which is the beginning of the day, this candle is the first candle, and market opens right here, and the opening of the wick is one of the most important places that you have to always consider as support or resistance. Markets see this level always, and if you had taken this trade, this is the first place that you had to take your profit. And also there is another reason that I wanted to exit right here. What's the reason? If you had this is the last higher low. Between this last higher low and this low, if you were in the live market, you could just draw between this low and see what happens when market comes to this level. 1, 2, 3 touches. And since it's a channel, okay, and channels finish again after 3 touches, so if this is the first touch, and first touch, guys, even has begun into the previous channel, the interesting part here, okay? So market breaks below, 2 times, comes back down, goes up, comes back down, exactly what happened exactly here. Then you could have taken the opposite side of the trade. This is another trade, okay? So I put my profit target here and I went out of the market, but I didn't take this trade. Right? And if you had taken the trade with this beautiful candle, you could have put your profit target right at the top of the channel. And another way that you could have draw this trend channel line is that between these 2 levels, which was really clear and everybody, even beginners, can see this, you could have drawn this line and then just copy it towards this second low. You see how beautifully market comes back and touches this level? This is also the way how you can measure the possible voids of the channel. All right, so let me zoom it a little outside. I told you, if this is the spike, the second phase is the channel. After 3 touches, again, channel finishes, comes back down. Now we know that we are into the third phase of the market, which is the trading range. And where is the trading range? Trading ranges begin. The area you have to draw your line is the top of the channel, and also the bottom of the first low that market creates after trend line is broken. Trend line breaks here, comes back, and market rejects it, and this is a very important place. And if your market comes back down, you have to always take a look. This is the bottom of your trading range, and you see how beautifully it has responded to this level, right? Okay, sounds like zooming in is not a good idea. Okay, so market comes back down again. It creates a small minor double bottom here, comes back down, market rejects it, comes back down. A very good double bottom. You could have taken the trade because we are in a trading range, right? Lots of pullbacks in one small area tells me that it's a trading range behavior. That's why you could have taken this trade. And where is the target? The target is the top of the previous channel. You see, market comes back and even test, breaks above it. Okay, so the second cycle, a spike, channel, trading range. Now, what happens here? What has happened here after this trading range finishes? Are we into a new cycle? We know that when trading ranges break, as an example here, you have to measure from the bottom to the top, drag the line below to see whether market is going to respond to it or not. And it has clearly responded it. So again, the same process begins here, just as simple as it is. I'm going to measure from the top to the bottom, and then I'm going to drag it because from the breakout point, which is here, and see where is the next possible target after this trading range. And when market touches this level, I'm gonna see whether it is going to respond to this level or not. So but right now we haven't touched this level, but right now I know that market is in a bullish trend. Right now market is also in right now it is above the 20 moving average. Exactly right now also market created a beautiful double bottom, so definitely I'm going to take this trade. But there is something here. I'm gonna take it because I want to just show something specific. I'm gonna right now buy at the market. Where does my stop loss goes? My stop loss goes, as I told you, below the last low. Market breaks above the stop, comes back down. It's right now a minor double bottom right here. Okay, it's not a bad trade, guys, but because it hasn't broken this top, market comes back down and test this top, and even it can touch my stop loss. It doesn't matter, but to be safer, you can even drag your stop loss below the last low that market has broken its top, which is this top, and this is the low, and we should see whether market is going to break from the top of this level or not. Okay, but this double bottom tells me that it can pushes the market higher. And also I can see another pattern here, which is a triangle, a vertical triangle. So, and we know that they are continuation patterns, but it is not just this, guys. There is a point here. There is something that makes me concerned about this trade that I have taken. Okay, and the reason is this line, this resistance level. What is this resistance level? The resistance level is the beginning of a channel that was formed in New York session in previous week, and all channels, the beginning of the channels, get tested by the market. And even this channel upside could have get tested, but it never happened. Okay, and there is, because it didn't get tested and it broke to the upside, something tells me that it can go higher. But this beginning of the channel, it could also play as a resistance level, and market can reject downside. And right now, guys, we are into also another wider trading range. So this whole area is also a bigger trading range. Yes, trading range. Something really big. Where is this trading range? This trading range is this whole area. And you see lots of price action has been formed here. Spike, channel, trading range, breaks below, another spike, channel, trading range. Two cycles have been formed into one specific trading range, which is really wide. This is how price action works. Right, and right now we are at the top of the trading range. It is creating a vertical triangle, and vertical triangles, since they usually form at resistance or support level, or places you have to watch carefully. Okay, I know I have taken this trade right now. It's a buy setup, and the reason is that I still think this trading range is the place where lots of traders have gone up. They have put long positions because they believe this top can get tested. This is a measure move target. Let me drag it. You see? So this place is gonna get tested. Right now market tries to break it. Nobody knows until the candle closes. Okay, so don't forget, cycles into cycles are an inevitable process of price actions, and you have to carefully watch it. The thing I told you, or I explained today, requires lots of years watching markets live and taking the trades, and market is going to punish you for every movement. So this is a long process, but you have to hold tight and never get tired of it, because it's absolutely amazing and it is going to offer you a lot of opportunities every day. Thanks for watching this video and have a good day. Bye.